even though energy stocks broadly are up, there are some high-profile pain points. Parex Resources is one of them. It's the worst-performing stock on the TSX right now. For perspective on why, let's bring in Bloomberg's Stephanie Hughes. Stephanie, what is going on with Parex?
Hey, Amber. So Parex Resources fell by as much as nearly 8% today, and a lot of this has to do with an oil reserve report that was disappointing. Now, analysts largely expected a lackluster report just because the company signaled as much when it announced its technical revisions earlier, but that did not stop investors from selling it off and making it the worst performer on the TSX for most of the trading day, like you mentioned. Further to that, an analyst from 8 Capital said he expects more overhang on the stock because of the skepticism around the capital allocation and the appraisal efforts for some of its oil wells. Further to that, Bloomberg intelligence analysts were pointing to social protests taking place in northern Llanos, which is an area in near Colombia and Venezuela, which they said could challenge the company's midpoint production growth target of 5%. So they anticipate that 2024 is going to be a challenging year and going to have a few operational risks ahead.
We're also, it was a quick earnings season for the Canadian banks, all of them out this week. Canadian Western Bank reporting. I mean, they beat expectations modestly, but it sounds like that's not enough for investors.
No, it wasn't. And so it fell as much as nearly 5% today before recovering some of the losses, but it's still among the worst performers on the TSX. And that's because analysts were expressing concerns around credit risk and rising loan impairments and provisions for credit losses, the amount that banks set aside for loans potentially going sour. So National Bank analyst Gabriel Dechaine noted that revenues were also lower and gross impaired loans had climbed about 19% from the previous quarter. He also pointed to some top line weakness like lower than expected net interest margins and lower commercial loan balances. But like you mentioned, he flagged that it was, for the most part, an inline quarter.
All right. Thank you very much. That's Stephanie Hughes reporting on some of the movers we're seeing on the TSX.